Hey everyone, welcome to Breakout Wednesday for the 22nd of May 2024. It's currently 8:30 p.m. on the West Coast, 10:30 p.m. on the East Coast. First of all, remember, this is never financial advice. I'm not a financial advisor. This is simply a video blog on how one trader sees the market, and everyone needs to take responsibility for their own decisions. All right, episode 200 tonight. Obviously been doing this for over 4 years now on this channel. I've had a lot of fun with it. Had some good calls and some bad calls, but hopefully the most important thing is that there's been a few people out there who have learned to, take charge of their own decisions, and can manage their own money a bit better. Don't have to rely on outside influences to make decisions for them. That's the power of the whole thing. Here's a chart of the All Lords that is now sitting again just right below new highs. The markets are rallying, they're in long-term uptrends, and looking to obviously capitalize. Now, there is a new thing you're going to be sitting on some of my charts tonight, and that is a relative strength rating. This chart here is a mock-up version. It's just a demo account that the developers are kind of working on. This will be turned live hopefully within 1 or 2 weeks, okay? But I'm just going to quickly, you're going to see this on a lot of my charts tonight. Relative strength rating is very, very different to RSI, okay? Do some research. The best way to learn about it is to buy this book and study it, How to Make Money in Stocks by William O'Neill. Really is the Bible of momentum trading and using relative strength in your decision making. Other kind of really well-known investors out there like Mark Minervini use relative strength ratings. He tries to never buy anything with a relative strength less than 70, okay? And what it really is that it ranks stocks. Okay, 1 is incredibly bad relative strength, and 99 is incredibly good relative strength. It's kind of putting these stocks in percentiles compared to the overall market. So when you're looking at US stocks, it's comparing it to the S&P kind of 500. If you're looking at NYSE stocks, okay, and then the ASX is comparing it to the XAO stocks, right, the ordinary stocks. And so, the way I view relative strength is that when you have super cheap stocks, okay, here's AGC, for example, okay? They've broke out, let me just show you, broke out of this Davis box a few weeks ago, back here at '09, and went batshit nuts, okay? It's gone up to a high of 50 cents. And so that has a relative strength rating of 99, all right? And so, the relative strength rating, number, on the ASX market is kind of a little bit dominated by really cheap stocks, because obviously, this measures performance compared to the overall market over the last 52 weeks, right, over the last year. And if you have a cheap stock that's gone up 10x, it's really hard for expensive stocks to compete with that. So sometimes you do need to take that into account when looking at the ASX market, because it is different. In the American market, it has cheap stocks, but it has a lot more expensive stocks in the ASX market, okay? And so, but generally speaking, if you have like a large cap stock, like let's look at, say, one of my favorite companies, right, ResMed, it has a relative strength rating of 81, right? For a pretty expensive stock is incredibly good. And what that's telling me is that this is like better than kicking ass of 81% stocks in the overall market. It's an expensive stock, which adds huge weight to that finding. It's over 70. And so, as a momentum trader, I'm trying to make most of my decisions in these stocks which are kicking ass the overall market, okay? So this will be different when you get into the penny dreadfuls, as I just kind of went through, all right? I'm going to be talking a lot more about this indicator as it rolls out. We don't, the next step is to have the indicator charted down here. It'll be a line trending up and down on the bottom here. That will be implemented over the next week or two, and then we'll be turning it live for all the members, okay? There's also a scanning function we're building, okay? Where is it? Indicators and events. Relative strength here, okay? Relative strength, and you can scan, above 70, above 80, above 90, or whatever you'd like, okay? And it finds those relative strength stocks. I think it's a huge plus. The system has made the relative strength indicator incredibly easy to use compared to the other platforms that I've tested and played around with, which is cumbersome. You need a bloody, you kind of, you just need, it's just so hard to use it. This is just so easy. You click a few buttons, boom, and you have your results, okay? And I think it's just going to be a huge game changer for Pro Trader, and, I'll be talking about it a lot more. Now, let's just quickly rattle through some stocks that I talked about a bit last week. NVIDIA has earnings coming out on the 24th, right? So Friday, I think, Friday US time. And has a relative strength rating of 98. It's obviously been dominating over the last year. It's been leading the market higher, and it's sitting here below the highs. Now, I do have a small position on it. I think I'm probably going to hold it into earnings, to be honest. It is a small starter, and I actually still have a little bit from a while back on this one, but obviously my main trade here, I'm out of most of that, and so I've got a bit of a buffer. I've made decent money on the video, and I think I've got enough buffer there to hold a small position of that into earnings. We'll see how she goes, okay? The other main stock I was talking about last week is Lilly, okay, which has a relative strength of 90. Okay, this has been kicking ass, obviously, over the last 52 weeks as well. It's exactly the sort of stock that I want to be in, okay? It's expensive, it's awesome. It's a quality company with supply demand in its favor and awesome fundamentals, putting in a lovely basing pattern over a couple months with a relative strength rating of 90. Okay, there's just nothing wrong about that, and we'll see how she goes. The other one from last week I was talking about is KGS. Now this has a relative strength rating of 0. That's because, for this to have a rating, it needs to be around for over 12 months. This has not been around for over 12 months, therefore it's going to be 0. Okay, that's just how the code works. So when you say 0, it's because it's a new float, right? LYC and ASX, I'm not in it, but it has a relative strength of 52. When you're bottom fishing, like all these, I'm in PLS, right? This is the one that I've bet on for the next kind of couple years, at least. It has a relative strength rating of 39. Relative strength rating only really works when you're for classic momentum trading, Mark Minervini, William O'Neill, Stan Weinstein style. Okay, then it's brilliant for it. But when you're trying to be a contrarian and get into stuff when it's kind of you're trying to pick a low and it's you're trying to act more as like an investor would act, like trying to think more like Warren Buffett and not so much like Mark Minervini, if that makes sense. Then the relative strength rating is absolutely dead shit useless, okay? You probably want a low number there when you're trying to pick things up at value, at below value, okay? And so it's just, you got to use it in context, all right? So I was just talking about LYC. It's still, it's basing now, consolidating above its resistance there. And just Hack, I've been talking a lot about Hack and how it's had this long kind of retracement, and it's kind of now breaking above it. Had a nice orderly breakout, a little pullback. We'll see how she goes, okay? Now, just a few setups I want to quickly rattle through. First of all, there's LLY, which kind of did break out last night, but it is really, I took a little cheap starter on this and a pivot down here. I've added to it, so I've pyramided into it already. I've got 2 positions. I'm set on that, and to be honest, I don't need much more in the account because I have a decent amount of percentage of my account in this stock. Okay, that's how I think that good returns are made compared to the market averages by going. Diversification is bullshit. Going heavy and winning is the way to do really well, in my opinion. And the opinion of kind of that's not unique to me. That's the Buffett has that opinion. Charlie Munger had it. All Mark Minervini has it. All the kind of people that we should be learning about have think diversification is overrated, right? And so LLY is just kind of a stock that I'm heavily in. NVIDIA I've talked about. There's a little tiddler on the ASX just with this huge base that's been coming up in Davis boxes left, right, and center, and has a relative strength rating of 99, but you just remember it's a cheap stock, okay? ASX is a little bit different, but it's still, just goes to show the last 12 months it's kicked ass compared to, 99% of stocks in the ASX. and it's just sitting here, basing. I don't actually know what this company does. I can see it's in metals and mining, but all I'm looking at is that base and thinking, holy shit, that is statistically a very good base. Okay, so AKM, that came up in weekly Davis boxes, daily Davis boxes. It came up in this Frank scan, I think, on weekly chart power, weekly data. It's coming up on just scans all over the shop, right? What else was there? And I just wanted to quickly rattle through some one kind of use of relative strength. Like, let's have a look at NAB. Okay, it has this is setting up here. I've been looking at this, right? So it's been, big uptrend, nice consolidation, blue sky above it. We look at a weekly chart. This thing is just like, shit. It's a nice setup. Hey, it's got a relative strength of 76, I think it was. Okay, and then we compare that to a stock in the same sector. Okay, say I know it's this is a much smaller company, but PPM. Okay, it's a cheaper stock with a relative strength of 59. So if I'm trying to, obviously I'm a long-term investor in PPM. Okay, and there's a chance it's going to break out here, and it's going to have a relative strength of 99 in 6 months. Who the hell knows, right? But but today, if I was flat and I didn't have a trade or position in any of these, and I'm trying to make a decision, I'm always probably going to go the one with the best relative strength, okay? Because winning horses tend to keep winning, winning sports teams tend to keep winning, athletes tend to keep winning, and winning stocks tend to keep winning, okay? The good companies tend to continue to be good companies. Shit companies tend to continue to be shit companies. And they're all businesses at the end of the day. If you've got a shit business, it's pretty hard to suddenly turn it into a good business, okay? Sometimes they're just cursed, right? Not talking about PPM in particular there, I'm just talking generally. That's it, guys. I've enjoyed 200 talks. Hopefully punch out another 200. And, I hope there's someone out there that gets something out of this. Take care, everyone. Chat next week. Bye.